Crypto kids, it's been an absolute bloodbath for Bitcoin, cryptocurrencies, and the traditional financial market over the past hour. But if you've been a Crypto Kid viewer since Monday this week, then you would have known that the high probability was that we continue going down, down, and down, and down. Why? 6-hourly bear flag, retest to prior support, get rejected, initial target lay at $60,800. The two targets after were 59,900 and 59,100. What did we do? We bounced beautifully with a wick from yesterday at 59,100, closed the candle body at 59,900, and started going higher, which was a trap. A trap just 1.5 hours ago with Isaac Crypto. We were streaming the PCE data. I said, it's a dead cat bounce. It's not a V-shaped recovery. We've established a lower high and a lower low. In bear markets, a downtrend within a bigger downtrend just means that you will likely continue to hit way lower price territories. And that's exactly what we've done. We've reached $58,000 for all the scalp traders there. I know you're curious on what I'm doing with my positionings. Where I personally see the absolute low being reached upon, we gave some levels from yesterday's recap. I want to bring it back on this video just as a reminder. We'll go through MSTR that's crashed to $89. We brought up the head and shoulders pattern forming at $112, so we're down 20% since we posted this head and shoulders. Stretches down massively. You're all wondering, will strategy capitulate? Will they get liquidated? That will also bring up, and we'll end off with a cool surprise. Stay tuned until the end. You're going to be very excited about this surprise. Guys and girls, if you enjoyed this video, please do destroy the like button. Yesterday, 645 likes. Unbelievable. Really unbelievable. Thank you so much. Thanks to your likes and support, the video reached 8,000 views. 8,000 views. Really, it just means the world when you can destroy the like button. It's all I ask for. Thank you if you have done so. And even if you don't and you just watch the videos, I still thank you. I appreciate every single one of you. Let's commence with the very immediate short term for BTC. What have we done? Well, we've done another lower low, keeping the downtrends. And we're getting close to some of the levels from March to November of 2024 that if we hit it, like it could very well be the entire low for the cycle. There are three prices below us that are very crucial to know. One is at $55,000, two is at $53,500, and three is at $49,000. Why? Daily time frame. We jump into March, November, excruciatingly long consolidation, super boring consolidation. At 55,000, you've got the candle body from July, okay? Candle body from July. Then at 53,500, my second favorite out of the three, you retested, didn't close below, even on the Japanese yen carry trade washout. The final retest made you go into the new all-time high of $106,000, ultimately to $126,000. 53,500, so important. If we fall to it, that could literally be the low of the bear. 49, it's where things get interesting. 49K got you the rejection in March of 2022, got you the rejection in the Bitcoin ETF hype, and provided you support on the candlestick of the Japanese yen carry trade. Meaning that lower targets for Bitcoin could be one of those three lines. I would be watching very closely for one of these three lines. The trades I'm taking are just spot buys. I'll spot buy Bitcoin right after this video. I'll spot buy Bitcoin if we fall to these three levels. I'll spot buy Bitcoin if hypothetically we even went lower. But the leverage trading opportunity, the big leverage trading setup, is the falling wedge pattern. The falling wedge is a complete repetition of what we had in the prior bear markets. The support line drawn from the mid-bull bear, just like it was drawn from the mid-bull bear. The resistance got multiple tests. Even a retest was given to us in February of 2023. Once we break the resistance of the falling wedge, I'm going to go massive, massive long. Massive long. That line of resistance coincides with the daily 200. When we broke above the daily 200 in the last cycle, that was it. Bear market done. You can start your bullish upswing. Same case in the cycle before too. I'm going to go long when we break the 200 daily, which will coincide with the falling wedge resistance. If you want to stay tuned for when I open that huge long position, then I urge you to subscribe, turn on the notification bell, and check out one of our exchange partners using the links below to get the best bonus possible. BTCC are providing the biggest bonus out of all of our partners currently. Second link in the description with just your email address and password. You'll get access to up to 30,000 in sign-up bonus plus 10% deposit bonus and a 33% discount on your trading fees. In short summary, spot buying is what I'm doing. And for leverage, we're eager to see a breakout. We're very eager to see a breakout. Okay. Phew. Bitcoin T8 done. Check. Now we can move on to the next thing. Oh, I had my levels here in full screen. I should have just shown that. Sorry, I forgot. What happened with inflation? Inflation came out to be 30 basis points higher than our prior reading. I saw a lot of crypto kids were asking, Crypto Kid, why didn't we get lower inflation? Well, the reason is it's lagging. So the report from this afternoon was actually May's data, not June's data. In July, we will see June's data. Energy prices represent 80% of inflation, and they only started to crash down in June. So next month, we should begin plateauing, and towards the end of summer, slowly drift to the downside. Is it enough for the Fed to cut rates? I do not think so. The next meeting has a 34% chance of seeing a rate hike. The best case scenario for 2026 is we end with no rate hikes. That's the best thing that we can all wish for. And fingers crossed we get an FOMC press conference where a little bit of forward guidance is given. I don't know. They may have gotten rid of the FOMC for the next, or the press conference for the next announcement. Who knows? Kevin Warsh doesn't seem to want to do press conference after press conference. It would be cool. It would be nice for volatility. It will be good trading opportunities. And maybe one of the reporters can ask a question and we have an understanding of some things that we could see towards Q4 of the year. To end off, MSTR breaking below the head and shoulders. $112 was when we posted it. Now we should be 20% lower, exactly 20% lower. Ugly looking chart. We confirmed a break below the head and shoulders. There will be support at 83, the highs of 2021, but very feasible that we come down to even potentially $35. Not a buyer of MSTR at all in bear markets because you're amplifying your losses. In the bull market, you amplify your gains. So yeah, in the bull, it makes sense to have MSTR. But in the bear, it makes no sense. Does this mean with stretch falling 20% off parity? Look at that, 25% we reduced to this trading day. Does it mean that strategy will go bankrupt? No, it's impossible. They have too many Bitcoin to go bankrupt. But they could sell more. They could sell more, and they'll buy what they sell back in the bull. But in the short term, like these things, Michael Saylor marketed stretch. He literally marketed stretch as a way to escape volatility, as a way to escape price volatility. I've got to find it for you. If I go to my X account profile, let's see. Stretch. Saylor described it as it strips the volatility away. You're down 25% from parity. And the only dividend you receive is 11.5% yearly. It's really bad. They'll have to increase the dividend on June the 30th. And how are they going to pay for that dividend? with their cash balance and over time, maybe with their Bitcoin. Will it lead to liquidation of Sailor? No. But is it bad? Yeah. These things occur closer to the bottom. All the perfect storm of bad things happen close to the bottom. I'm seeing this as an opportunity. We've got the patience, we've got the diamond hands. We know that 59K is super cheap. We know that we're retesting things like the 200 weekly moving average. It's giving you the low in prior cycles. We're at a good place. We're at the support of the falling wedge, similar to this. I mean, you could even say it's either one of those two lows. You can compare those two. We're at a good price to accumulate. That's what I'm doing. Not a price to sell, but a price to accumulate. These tough times will be over. It's temporary. And next year and the year after, we'll be making much more positive videos. I believe that from the bottom of my heart. Something incredible happened. Let's end the video off in a light mood. Ben Cowan announced his first ever conference that he will be doing in Miami this year in November 20 to 2022. And I'm one of the first speakers that is on the website. It's just unbelievable. What an absolute honor. I'm so looking forward to this. So looking forward. More information from my side will be shared over updates in the coming weeks. But as a teaser, this will be a great conference and very excited to speak. Thank you all for watching. Take care, and I'll see you on the next update. Bye-bye, guys.